Ladies and gentlemen, thank you for patiently waiting. You have been connected to the Bharat Forge Limited earnings call. The call will begin shortly. Please stay connected. Thank you. Ladies and gentlemen, good day and welcome to Bharat Forge Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Kalyani. Thank you, and over to you, sir.
Yeah, good afternoon, ladies and gentlemen. This is Amit Kalyani, and welcome to the Bharat Forge Q3 analyst Concall. Thank you for joining us. I have with me our teams from management, both from automotive and industrial, and our investor relations and finance teams. As usual, I'll take you through a quick rundown of what happened during the quarter and then open up for Q&A. So we had in terms of BFL India, we had a fairly strong performance. We had a high revenue of 1,952 crores, exports of 1,166 crores, which was our highest ever. EBITDA margins was fairly good at 25.2%. PBT was impacted in this quarter because of finance cost and exchange impact on MTM of about 35 crores, which is a one-time and notional. I would expect a normalized interest cost in the range of 50 to 55 crores per quarter. Passenger vehicle revenue has continued to grow and is now at about 20% of total revenue, which used to be in mid to low single digits 3-4 years ago. Our export industrial revenues grew by 14% sequentially, driven by both oil and gas and aerospace. We've had new order wins in Q4 of about 265 crores, and for the 9 months of about almost close to 1,500 crores. Coming to our defense business, we've had a good run this year. We've had a total order booking of about 2,000 crores, including 600 crores just in Q3. These are all export orders, and this will all be completed in the next 2.5 or so years. These are both for artillery guns, mounted guns, and spares and consumables. And some part of this will be repeat business, and obviously the capital items will have an O&M component to it as well. Coming to our overseas subsidiaries, we've had a miserable performance with an EBITDA level loss of 62 crores, primarily driven by 3 factors. One is low capacity utilization due to ramp up of the new facilities in Germany and North America. Overall, we have about a 7.5 million piece capacity per year, and our current rate of production is at about 50%. The old plant is running at about 70%, and the new plants are running somewhere between 25 and 30%. So overall, we have about a 50% capacity utilization. We have, I do want to reiterate that while we are, in the ramp-up phase, and we do have to have, we have a path to profitability in work going on. The capacity is fully booked with orders. We are continuing ramp up, and we are working on getting all our cost compensations and price increases from our customers. And I expect that we will see a better performance in Jan to March, and we are very confident that in FY24, all this will be significantly value accretive. In terms of the JSA business, I'm happy to report that we have had a top line growth of 20% and EBITDA growth of 52% in Q3. We have secured new business of about 153 crores this quarter, and our total order wins post-acquisition stands at about 250 crores. We have signed a binding term sheet with Indo Shell Mold to acquire its SEZ unit in Sipcot. We expect this transaction to complete by March 2023. This plant is located about 3 kilometers away from JSA SIPCOT plant and will therefore have a lot of efficiency benefits of management and overhead and give us significant increased capacity. Our total melting liquid metal capacity will go up to about 120,000 tons, and casting capacity will be about close to 75,000 tons or so. I expect that the JSA business will grow at a very healthy double-digit CAGR over the next 3 years. When we bought this company, it had a revenue of about 420 to 430 crores, and next year we should be at somewhere in the region of 30 to 35% higher than that, and year after that should be also possibly a similar amount, if not more, because we may also have the Indoshell acquisition in place. We're very bullish about this sector, and overall I think next year is going to be a really turning point in Bharat Forge's history, because a lot of the businesses and ventures that we have incubated over a long time, and some of the new acquisitions and new ventures will all turn from either dormant to positive or negative to positive, or mildly positive to highly positive. So we expect this growth to continue. We have a lot of new order wins on our traditional business, especially in the Pascar sector, in the industrial sector, in the casting business, in defense, and we will turn around our aluminum forging business and our overseas operations. So overall, I expect that next year will be a good year, and Q4 will be a step towards that direction. I think that's really all I wanted to say, and I will now be happy to take your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Pramod Kumar from UBS. Please go ahead.
Yeah, thanks a lot for the opportunity, Amit. Amit, the first question is on the US and the European aluminum business. If you could just help us understand, you did mention the opening comment that you expect them to be accretive next year onwards. If you can just help us understand what is the big drag, what you're facing on the ramp up, and where are we in terms of the utilization rates for these capacities, and directionally, how do you see the margins in context to your existing businesses once they have the full ramp up and the cost niggles are kind of behind us?
Yeah, so right now both these plants are operating at, I would say, about 25% capacity utilization, because we have a lot of product development going on, a lot of product ramp ups going on, and also training and development of manpower, especially in the US. How do we see this ramping up? We have a defined production that we have to produce in the year, and we are working towards that. At the same time, we also have to get compensation for all the cost increases that have happened inflationary wise in Europe and the US, which includes energy, which includes manpower, which includes freight, which includes overhead, and so on and so forth. So it's a combination of growing your top line, increasing your margin through cost compensation, and reducing cost through efficiency.
And margin relative to the rest of the business, do you expect the gap to be close?
I would expect our margins, when we are running at, let's say 75-80% capacity, to be in the high teens.
To be the high teens. Okay, no, that's good to hear.
16, 17, 18%, in that ballpark.
And of course, there'll be upside if you can ramp it up higher beyond like 85-90% as well. So the operating, yeah. So great. Thanks for that. And the second question is on the CV industry, Amit.
As you said CV or PV?
CV, sir. Sorry, India Commercial Vehicle. Sorry. Yeah, India Commercial Vehicle, to be precise. You did talk about 4Q momentum being strong. Just want to understand, is RDE not causing any production disruption when you look at the production schedules, what you have from the OEM? And do you expect it to be a normal?
What is causing
RD,
production?
the real driving emission regime, the transition to the real driving emission regime.
No, not that we see, because we had a review just last week, and our projections for Q4 MHCV is close to 100,000.
Wow,
This is what our customers have told us.
And extending it to the international side, because of the increasing concerns on U.S. interest rates and the economy, is the commentary from the OEMs changing? Because as we understand, they're booked out for 23, most of the capacities are sold out. But are you on the margin seeing some bit of a cancellation and some bit of a reduction in the optimism on 23 from the U.S. OEMs for the truck side?
No, nothing in that of that kind at all. Actually, I will let Subodh comment about this.
No, I agree. We are not seeing anything.
So we are not seeing any slowdown or any downturn in the U.S. demand as of now. In fact, it remains strong, and we expect that next year will be as strong as this year.
Great. And final question on defense, Amit. As we understand, ATAGS, your gun is like the last one in the fray. But they got used in the Independence Day celebration last year. But it's been quite some time. But we still haven't seen the order coming in. We've started exports already for a separate gun. So by when do you expect some a development on that count? Because I think you're ramping up capacities. You're creating the entire infrastructure. But we haven't seen the orders coming through.
Well, I think we're at we're on the edge. I think very soon you should hear something, hopefully in the next, couple of months.
Great to hear that, and wish you all the best. Thank you.
Yeah, the PM has also talked about this, so hopefully, all of it should fructify in something. Thanks.
Yeah, thanks a lot, Amit. Thank you.
Thank you. Next question is from Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, Amit. So continuing on defense question, so the 600 crore order is largely for spares and ammunition, or we have also won any gun or the vehicle order?
So it's 50-50. 50% is for capital items and 50% is for spares and consumables.
Okay, and you indicated this is largely for exports.
All of it is for export.
Okay, so the export side is ramping up pretty well in defense,
Yes.
So that's good to see.
Yeah.
Got it. And second question.
The entire order book right now is for defense, for exports.
Exports, okay. Got it. And coming to JS Auto Cast, so we have seen a good amount of pressure on margins vis-a-vis what they used to make earlier, from 16% to close to about 11%. Is this largely because of metal prices, or there is something else to that?
So there are two factors. One is inflation, and the second is that they had one customer who had a very high margin business, which has now come down to almost zero, because that customer had its end demand coming from Russia.
Okay.
So because of that, there is a postponement in that business.
Right. So sustainable margin for JS Auto Cast would be what, about 13-14%?
No, I think our goal is to take it to about 15-16% in the medium term.
Okay.
So I would say in a year or two.
Got it. And lastly, with respect to the impact of commodity prices, so have we started to see benefit of lower steel prices and aluminum prices?
Not yet. It's flat right now.
Okay, so that will be additional driver of margins from here on.
Yeah, when they start coming down, yes.
Right. And lastly, can you indicate USD INR for the quarter? USD realization?
1.5.
Got it. Thanks. Got it. Thanks. I'll fall back in queue.
Thank you. Next question is from the line of Mumuksh Mandlesha from Emkay Global. Please go ahead.
Thank you so much for the opportunity, sir.
Mumuksh, your line is...
Can't hear you, sorry.
Please speak up a bit.
Okay. Can you hear me? Can you hear me, sir?
Yes, this is better.
Yeah. Thanks for the opportunity, sir. So what was the revenue for this M4 this quarter, and how much is more pending in coming quarter? And any update on the reversal of penalty that occurred in Q2, sir?
No, so that matter is still being, let's say, discussed and debated with the ministry. I don't have a figure for you right now. I would say roughly 80 crores for the KM4 for this quarter.
Right. So can you share some light on the Bharat Forge attendance at the Aero Expo? What kind of traction and what are new products company displacing?
So look, we currently have a strong business in 3 areas of aerospace. By the way, we are at the Aero Show, and if any of you are visiting, kindly visit us, chalet number 35, and I will be there tomorrow as well. In fact, right after this, I will head to Bangalore. So currently our exposure to aerospace is in 3 areas. We make aerostructure components, which are forgings, complex forgings. We make landing gears, and we make engine components. And I'm very happy to tell you that we are the only company in India which is certified for article forging by NADCAP. So we're the only company which is certified for all materials, including materials that we make in India, in Sarloha, and using them and converting them to forgings. So nickel alloys, maraging alloys, and titanium. These are the 3 materials that we forge. Of course, aluminum also. There are certain aluminum parts also we forge for aerospace. We are seeing very strong growth in our aerospace business, and currently what is happening is that we are seeing a lot of US involvement in Atmanirbhar Bharat by setting up manufacturing facilities to manufacture certain large systems in India. And that is where we are becoming part of their supply chain. And by getting into the supply chain and value chain of these companies in India, we also will get into eventually their supply chain outside India, because there has now been an agreement between India and the US where in areas of high technology, cyber and those kind of areas of working closely together and creating mutual supply chains. This is what happened in the beginning of the month in Washington DC. So we expect to see some positive fallout from this going forward. In fact, there is a very strong presence of US companies on the buying side at the Aero Show.
Right, sir. Thank you for the explanation, sir. Sir, can you possibly indicate what kind of revenues for FY24 we see for different segments, sir?
Yeah, I don't want to give you a forward-looking statement, but it's going to be substantially higher than what it is this year.
Thank you.
That will be, I would say, order of magnitude higher than this year.
Thank you. Next question is from the line of Pramod Amte from InCred Capital. Please go ahead.
Yeah, hi, Amit. This is with regard to the international operations. I understand your aluminum forging is taking time, but even if I have to look at your steel forging on a September quarter versus December, there seems to be a slippage into a losses again. Is it more seasonal, or you feel these are like...
No, there is no loss on the steel business. It's all from the aluminum business, and the steel business is operating positively, but at a slightly lower EBITDA than what we'd like. See, all of the businesses have had to deal with a very strong, let's say, inflationary atmosphere. And Germany has been especially badly hit because not only has it been an inflationary atmosphere, it's also had very big problems in terms of manpower availability during COVID. So a combination of all this has led to a decline in profits, but it is still EPS accretive and positive.
And coming to the aluminum business, have you already seen the turnaround in the international operations, or you are hopeful of turning around in the March quarter?
Oh, we are seeing improvement in Q4 over Q3, and in Q1 we will be even better off than Q4. And as I mentioned, we will get to the numbers that we have indicated by the middle of the year, but we will be EPS accretive for the full year FY24.
And just to understand better, are these programs going slow and hence it's taking time to ramp up, or it is more about?
It's a combination of multiple things. Europe has lost over 1.2 million car production because of supply chain issues last year. Between the Europe and US, they have lost 3 million car production because of supply chain issues. So it is a combination of external and internal factors.
Sure. And last one is.
Please remember that the price escalation and price compensation is something that we need to get in order to be able to operate at the level of profitability that we had planned.
Sure. With regard to EV parts, you are planning to open up some plants in India. Any update in the sense you have started them, or are they on course?
Those plants will start from next month. One plant will open next month, one in March and one in May.
Okay, sure. Thanks in all those.
Thanks.
Thank you. Next question is on the line of Gunjan Prithyani from Bank of America. Please go ahead.
Yeah, hi. Thanks for taking my question. Just two follow-ups. Just going back to the US truck cycle, there is a 6-7 month sort of backlog at the OEMs, but the order intakes have started slowing for last couple of months. So, any color on how we the outlook for the industry beyond 6-7 months of backlog?
At this point, most of the production slots for 2023 are covered, at least till November. It is not 6-7 months, and then basically, the last 2 months also have been around 18,000, which is slightly lower than the average. But the expectation right now is 2023 and 2024 will be reasonably okay.
Okay, got it. And the second follow-up I had was, I understand the defense ramp-up you mentioned next year, but if it's possible to get the revenues for both defense and aerospace for this year, maybe 9 months or this quarter?
I think we'll share that at the end of the year.
Okay, got it. And this just the last thing on the order backlog, now 2,000 crore which you mentioned, how should we be thinking about the translation of this into revenues? In terms of timelines, does large part of this start contributing from FY24 onwards, and the incremental win that we are talking about from Indian Army, that also starts kicking in FY24? So, it'll be 2,000 plus, is it?
Yes, it will be 2,000 plus because this does not include any of the Indian orders. You should start expecting to see revenues from this start growing from the second quarter of 24, which is the June quarter. July, August, September. Okay?
Okay.
And the entire 2,000 crores will be done in 30 months, largely in 2 years with some spillover into a half year more.
Okay, and that should be same for the domestic orders also, right? Once they come through, like the execution timeline is pretty much...
It depends on what the order asks for. Okay?
Okay.
If the order says I need it done in 5 years, it's in 5 years. If the order says I need it done in 3 years, it's in 3 years. So it really depends on what the order conditions and terms are.
Okay. Okay, got it. Thank you so much.
Sure.
Thank you. Next question is on Siddharth Bera from Nomura. Please go ahead.
Yeah, sir. Thanks for the opportunity. Sir, just wanted to understand, we have got a couple of orders on both domestic and export defense side. So, are we incurring any costs right now in our P&L as well for some of these orders?
So we are always incurring costs. See, first of all the products that we have developed so far, we have developed on our own. And all these products, the product development, R&D, and testing validation, all has been passed through our P&L. Nothing has been capitalized. Okay? Now, the new orders that we have won on the all the new orders for the systems are going to be executed by Kalyani Strategic Systems Limited, as we have already explained, because that is which is 100% subsidiary of Bharat Forge. It's only because all reps and warranties that one needs to give in this defense business, we don't want Bharat Forge to be there. We want it to be in a separate entity. And all the value-added components which we have developed over the last 5, 6, 7 years are all going to be manufactured by Bharat Forge and sold to this company at an arm's length profitable basis.
Got it. So, sir, I wanted to understand, just in case, will it be possible to quantify the amount of margin drag some of these costs will be impacting the quarter, so that when revenues ramp up, these will get normalized? Will it be quantified to?
No. See, whatever costs are being incurred as it is. There's not going to be any increase in cost.
Okay.
Okay.
And on the RM side also, we had some one-off defense costs last quarter. So if I adjust for that, it does not seem that it is we have seen any benefit since it has gone up on a quarter-on-quarter basis. So can you just throw some more color on why the RM to sales seems slightly elevated?
Sorry, Siddhartha, your voice is muffled. Can you please use the handset mode?
Yeah. So is it better now?
Yeah, a little bit. It's still very muffled.
Yeah. So just wanted to check. Last quarter we had some 70 bps one-time cost on defense vehicles last quarter. So if I adjust for that, RM to sales seems to be slightly higher only in the current quarter. So possible to highlight any particular reason why RM to sales remains elevated?
No, it's just raw material prices are high. Nothing else.
Okay. So based on current procurement, how much benefit should you think we should expect from current levels?
In what?
Yes.
I can't understand your question.
Please come closer to the mic. And
I am directly speaking on the phone.
My request is maybe you can have a discussion offline with our team and understand this in more detail. Because I think this is a very detailed question that you're asking, and I'm not exactly clear what you're asking. We're not able to hear you.
Thank you. We take the next question from the line of Amyn Sarani from JP Morgan. Please go ahead.
Yes, hi. Thanks for the opportunity. And apologies if the question I'm about to ask has already been asked because I joined a bit late. Your interest cost has increased quite sharply quarter on quarter. Is there a reason why that has happened?
Yeah, so let me explain very simply. The interest cost for this quarter has a 35 crore MTM impact, which is one time and notional. If you remove that, the interest cost will come to about 55 crores. Now, this 55 crores is quite a large increase over what it used to be in the past. And the reason for that is that on our foreign currency loans and the working capital loans, we have seen a pretty steep rise in interest rates and so forth. So while the spread remains tight, the overall cost has gone up, the base has gone up. So that is the increase in financing cost.
Okay, and now it will remain here unless global interest rates come down.
I would say that on a normalized basis, we should expect a 50-55 crores a quarter interest cost.
Okay, understood.
But the MTM is not going to happen every quarter.
Of course. And just going back to the commodity question, I think the reason why a lot of us are a bit confused is because a lot of the OEMs, and it's not like to like, have been talking about benefits on commodities which they have seen in the quarter. But I guess for you, your input is not just basic steel; it is specialized steel. So maybe the
pass through, right?
Yeah. Okay.
Please understand that the OEMs bear the brunt of this, whereas companies who are in the conversion business like us have a pass-through.
Correct. So ultimately, we should be looking at gross profit per ton or EBITDA per ton rather than looking at RM, right?
Exactly. You're absolutely right.
Fair enough. Thanks a lot. I'll come back in the queue.
Sure.
Thank you. Next question is from the line of Arjun Khanna from Kotak Mahindra Asset Management. Please go ahead.
Sure. Sir, thank you for taking my question. Sir, my first question is on the defense piece again. So while we have talked of the order book of 2,000 crores, Chairman on television talked about this largely being export. So is it a fair understanding that this is incremental defense business apart from what we already have? And that 1,000 crores what you have talked of execution FY24 would be incremental revenue for the company?
Yes. Yeah, 2,000 crores is our current total order book. All of it is exports. Okay, and roughly that amount, what you mentioned, is what we hope to do in the first year, execute in 24.
Sure. And we already have a defense piece where we supply other equipment to India, etc. So that's that business.
But we haven't received orders yet.
Sure.
Large orders.
I'm talking of spares and we have shells, etc. Other routine business that.
So, actually that comes in our forging business because we've been doing that for so long.
Right. Sure.
Yeah. These are new businesses which we have developed in the last few years, and which are more than just forging. They're components, subsystems, and systems.
Thank you. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. So for the quarter, we have reported tonnage of around 63,000, which is the best in last 16 quarters, and we have recovered very fast. But still, compared to FY19, we are around 10% below that. So do you think, given the growth prospects for next year we're talking about, we'll be able to cross all-time high tonnage next quarter?
I think next year our numbers will be significantly higher than what we have ever done, both in terms of, I would say, production and definitely in terms of sales, because we have so many new businesses. See, when you looked at it 16 quarters ago, it was a forging business. Okay, there was no defense, there was no aerospace, there was no casting. So these are three big new growth drivers which are going to have a big impact next year. So, those are going to be significant positive growth drivers in addition to growth coming from, our overseas subsidiaries, our Indian fundamentals, standalone business growing, and so on and so forth. So you're going to have a lot of other growth drivers.
Sure, sir. And sir, the last question from my end is, we were talking about European business. I mean, because of the war and everything, there was a weakness in the European side. But if I look at the numbers, our numbers are really good. I mean, they are very comparable. It's better than FY19 what we reported. So actually, those weaknesses have not been reflected in our numbers. So if Europe come back next year, or recovery happens, then our numbers will be substantially higher than what it is now.
Well, that's what we are hoping. And that's what we are working towards.
Okay, sure. Thank you so much, sir.
Thank you.
Thank you. Next question is from the line of Peter from Kesma Wealth Management. Please go ahead.
Hello, sir. Sir, I just want to probe a little bit on the Europe front. So in FY22, when US revenues decreased and Europe increased, so first I wanted to know that as a 9-month basis, what is the revenue split between India, US, Europe, and rest of the world?
1 second. 9 months. I don't have 9 months. I have the quarter.
Okay, sir.
We can have our team share that with you later.
Okay, sir. Okay, for the quarter, if you can share, sir.
So quarter, India was about 40%. It's in the update, yeah?
Okay.
Read the update. It's in the update on page 6 of the update.
Okay. And in terms of the revenue split in Europe, like what percentage is taken by CV, passenger vehicle, and industrial? And what is the outlook for industrial in Europe?
I don't have that information with me right now. Honestly, I think you should take that offline. But we expect both the CV and PV to be fairly strong globally for us.
Okay. And then my final question is that Torque, any update on any sales numbers and how is the demand looking for Torque EV?
So demand is looking good, and their new production facility will start next month, and then they will be able to ramp up quite dramatically. But whatever vehicles they have sold so far, they've sold, I would say, 700-800 vehicles which have covered more than a million, 1.2 kilometers without any accidents and fires and recalls. The technology is robust and well proven.
Thank you, sir. That is all from my side. Thank you.
Thank you. Next question is from Chirag Shah from Nuvama. Please go ahead.
Yeah, thanks for the opportunity. So 2 questions. Sir, one is a housekeeping one. There is a big forex gain of 41 crores in other expenses. Does it pertain to US business, mark to market on the US exposure? Or is there something else in that?
Mainly on the receivables on the euro side.
Receivables on the euro side. Okay, and this is again mark to market, right? So
yes,
this will reverse based on how it plays out for you, unless you realize that.
Yes.
Yeah. So second question is on the domestic revenue, there is a sequential decline of around 2% in the presentation that you have shared. Is it more to pass-through effect of commodity, or it's largely mix and a seasonal thing? Anything specific to call out over there?
There was a small drop in pass car, and there was an inventory correction of production in tractor. Sales didn't drop, but production for some OEMs had dropped a little. Small drop, that's all.
Okay, so it's driven by pass car, it's not driven by CV. Great.
No.
Great. Thank you very much, and all the best.
Thank you. Next question is from the line of Jinesh Gandhi from Motilal Oswal. Please go ahead.
Hi. Can you also update on Sanghvi Forgings, how it is doing? Where are we in terms of our ramp-up plans, and do we plan to expand capacity or look to increase value add there?
Yeah, Mr. Sanjeev Nimkar, the head of our industrial business, will talk.
Yeah, first correction there, we have renamed it as a Bharat Forge Industrial and Technology Solution, so we don't call it as a Sanjeev. Coming to your question, this year we'll be doubling the sales than what we acquired last year. So that business is doing very well, and right now we are at around 55% of capacity utilization, so we have huge scope to go ahead with that. We do not need to expand it at this point, but down the line 2 years we can look at it.
Okay. And are you looking at increasing machining there? I believe machining levels are very low, and that's an opportunity to increase value add for us there.
You are absolutely right. Machining levels are low there, but going forward, when I'm saying about expansion, primarily it will be on a machining side.
Also, we don't need to expand the forging capacity. To increase forging output, all we need to do is increase some heating capacity, furnaces, which are not expensive. The main heavy investment asset is already in place. And that asset can produce as much output as we used to produce from our 4,000 ton forging press in Mundwa, which is quite a large amount.
Got it. And it is now profitable at PBT level, or we are in process of turning it around?
Yeah, it's been profitable from day one, but as we add value to the product and we get new products approved and accredited, that's when we will start seeing increase in margins.
Got it. Great. Thanks and all the best.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference back to Mr. Amit Kalyani for closing comments. Thank you, and over to you, sir.
Ladies and gentlemen, thank you very much for your patience, interest, and questions about our company and comments. Your constant support is, something that motivates us and keeps us going and keeps us on our toes as well. So thank you very much, and have a lovely week.
Thank you very much.
And lastly, please do visit us at the Aero Show. Even if not tomorrow, any of the other days, our team will be there. It's chalet number 35. And if any of you need help in getting passes or whatever, get in touch with Kirti from my office and he will coordinate it. Thank you so much.
Thank you very much. Ladies and gentlemen, on behalf of Bharat Forge, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines. Thank you.